Gold just shattered $5,000 and closed the week above that level for the first time in human history. Bloomberg got caught spreading outright fake news that moved markets on Thursday. Russia's central bank chief personally confirmed they're not considering any dollar return whatsoever. The entire story was fabricated from thin air. Meanwhile, China just banned gold and silver rehypothecation and off-exchange derivatives in a move that could absolutely break the cartel. This is John speaking. Fair warning before we go any further. This isn't going to be comfortable. If you're looking for hopium or permission to stay complacent, you're on the wrong channel. If you want someone to tell you the system is fine and your dollars are safe, CNBC is streaming for free right now. But if you're ready to see how deep this actually goes, backed by hard data, settlement documents, and historical precedent, you're exactly where you need to be. Still here? Good. Drop a comment saying John if you're locked in and ready for this. Current prices as I'm recording. Silver Western spot is $77. Futures are $77. Shanghai spot is $86. Shanghai futures are $88. That's a $9 premium holding strong. Gold Western spot is $5,040. And as of this week, gold has officially closed above $5,000 on the weekly chart for the first time in history. Check COMEX and Shanghai data yourself. It's publicly posted, updated continuously, completely verifiable. Let me be crystal clear for those who didn't grasp the post on X. I didn't say gold simply traded above 5,000 intraday. I said it closed the week above 5,000 for the first time ever. Not an hourly wick, not a flash spike. The weekly candle closed at a price level we have never seen before in the history of markets. Bloomberg published a misleading headline yesterday that sparked massive volatility in gold and silver. They claimed Russia was considering a return to the United States dollar system. Russian central bank chief Elvira Nabiullina confirmed no involvement in any talks whatsoever. Zero. The entire narrative was fabricated. This is how fast macro headlines shake liquidity and short-term momentum. When mainstream media operates as a propaganda outlet instead of a news source, you need to understand what's really happening. Russia made it unmistakably clear where their journey is headed, and it's not back to the dollar. The whole story was ridiculous to begin with. In my last video, I said the Bloomberg article was misleading. Now it's verified. Russia is not going to return to the dollar. It was a lie. When a central bank chief publicly confirms no involvement in talks that supposedly happened, that's not misreporting. That's market manipulation through fake news. Bloomberg spoofed gold and silver markets with a fabricated Russia dollar story. Here's the data point that changes everything. China just announced new rules for non-SGE and SHFE off-exchange gold and silver trading. 4 critical enforcement actions that will reshape the entire market. 1. Off-exchange leveraged derivatives will no longer be tolerated. Leveraged paper longs, leveraged paper naked shorts, done. 2. Physical gold and silver deliveries will be enforced. No more cash settlement games. 3. Off-exchange fractional reserve gold and silver will be scrutinized. 4. Off-exchange gold and silver rehypothecation will not be tolerated. This breaks the cartel. When China bans rehypothecation and forces physical delivery on all off-exchange trading, that eliminates the paper multiplication mechanism banks have used to suppress price for decades. 1 ounce of physical gets rehypothecated 10 times, creating 10 paper claims against 1 real ounce. China just said that's over. Physical delivery enforced, fractional reserves scrutinized, leveraged derivatives banned. SHFE inventory sits at just 11 million ounces as China headed into Chinese New Year. 126,000 ounces were added to SHFE silver vaults on Friday, just barely staving off default. Silver closed at $89.17 on SHFE, a $2.31 premium over SGE spot. Gold closed at $504. That SHFE premium over SGE shows internal Chinese arbitrage spread widening even within their own market structure. When Shanghai futures trades $2+ over Shanghai Gold Exchange spot, that's physical shortage stress within China itself. David Morgan just dropped an absolute bombshell. The silver guru gave an exclusive interview warning the United States government will stockpile silver. Not speculation, a warning based on strategic analysis. Morgan explains why he believes the silver bull market has around 1.5 years remaining, during which we'll see the majority of the entire bull market's gains. 90% of gains, in 10% of the time, is the pattern Morgan's calling. When the United States government stockpiles silver for strategic reserves, that's a permanent bid from sovereign-level demand that doesn't care about price, only about securing supply before it's unavailable. Here's why United States government stockpiling makes strategic sense. China produces only 13% of global silver, but controls 70% of the world's refined silver supply. Mining is not the advantage. Processing is. Silver ore is economically useless without refinement. Refined silver is required for advanced military systems, AI chips, and high-performance electronics. No processed silver means no AI revolution and no modern warfare capability. The United States is desperately trying to achieve mineral and processing independence because China dominates refining infrastructure. Gold physical ETF holdings have yet to reach 2022 highs. Think about that for a second. Gold price in 2022 was around $1,900. Gold price now is $5,000. While gold price went up almost 3 times, physical ETF holdings sold off. Almost no one except central banks is participating in the gold trade right now. Retail and institutions are selling ETF shares while price triples. Central banks are stacking physical, while everyone else liquidates paper exposure. We are early. When price triples and ETF holdings drop, that's not speculative mania. That's fundamental revaluation without crowd participation. The United States government is running one of the largest budget deficits in history. The first 4 months of fiscal year 2026 saw the US budget gap reach $697 billion, third highest ever, running only below last year's record and the 2021 post-crisis response. Government outlays hit $2.5 trillion while revenues came in at $1.8 trillion. Net interest alone rose to $346 billion, over $1 trillion annualized, up from $322 billion in 2025. We're at deficit crisis levels before the crisis is even declared. A massive amount of United States debt is coming due. $9.6 trillion of United States marketable government debt will mature over the next 12 months, most ever in history. Double the number seen before the 2020 crisis. When you have $9.6 trillion maturing in 12 months while running a $697 billion deficit in just 4 months, that's refinancing risk meeting fiscal crisis head-on. The Treasury has to roll $9.6 trillion and fund new deficits simultaneously. Silver is trading at 77 Western, 86 Shanghai, $9 premium. Gold is 5,040 Western. Shanghai premium on silver expanded from $7 to $9 over just 3 days, while Western paper consolidates. SHFE inventory is 11 million ounces total with only 126,000 added Friday. China is enforcing physical delivery, banning rehypothecation, scrutinizing fractional reserves. The United States government is preparing to stockpile, according to David Morgan's analysis. Central banks are stacking while ETF holdings declined, despite price tripling. Let's talk about the bearish case, because intellectual honesty matters. Gold at 5,000 could pull back. Parabolic moves correct violently. Silver at 77 hasn't reclaimed 81 resistance on the hourly chart. Shanghai being closed for the holiday creates an 8-day manipulation window that banks have exploited historically. David Morgan's 1.5-year timeline could be wrong. United States government stockpiling is analysis, not confirmed policy yet. China's off-exchange rules could be circumvented or delayed in implementation. $9.6 trillion in debt maturity could roll smoothly if demand materializes. Bloomberg's fake news moved markets Thursday, but didn't break them. Russia denying dollar return doesn't force immediate dollar collapse. ETF holdings declining while price rises could reverse if retail piles in. A deficit of $697 billion in 4 months is unsustainable, but the government has sustained the unsustainable for decades. This is financial warfare education, not investment advice. Markets can remain irrational longer than you can remain solvent. But here's the counter-argument, and this is where reality gets interesting. Bloomberg got caught fabricating the Russia dollar story, which proves mainstream media operates as a market manipulation tool, not a news source. The Russian central bank chief publicly confirmed no talks whatsoever. The lie is documented. Gold broke 5,000 despite a fake news attempt to crash it. China banning rehypothecation and enforcing physical delivery eliminates the paper multiplication mechanism that has suppressed metals for decades. SHFE inventory of 11 million ounces is nothing against Chinese industrial and investment demand. David Morgan's warning that the United States government will stockpile silver aligns with strategic reality. China controls 70% of refined silver. The US needs independence for AI and military applications. Physical delivery enforcement means the paper games are ending in Chinese markets first. $9.6 trillion in debt maturity over the next 12 months is unprecedented refinancing risk during a deficit crisis. Gold ETF holdings declining while price triples means we're early, before retail and institutional participation even begins. Central banks stacking physical while selling paper through ETF liquidation shows sophisticated players are accumulating before the crowd recognizes the revaluation. United States budget deficit is third highest ever during a supposed recovery, not a crisis. This proves the fiscal situation is terminal. Net interest at 1 trillion annualized means the debt spiral is accelerating, not stabilizing. Russia publicly rejecting the dollar, while China bans metal rehypothecation, shows the multipolar shift is accelerating despite Western propaganda. What actually matters right now? Gold just printed its first ever weekly close above $5,000. Period. Bloomberg got caught red-handed fabricating the Russia dollar narrative. The central bank chief publicly confirmed a zero involvement. China dropped the hammer on rehypothecation, banned leveraged off-exchange derivatives, and is now forcing physical delivery across the board. No more cash settlement games, no more paper multiplication. SHFE silver inventories sit at 11 million ounces total, just 126,000 ounces added Friday. Enough to avoid default, nothing more. David Morgan dropped the warning. United States government likely to stockpile silver. His call is that 90% of bull market gains historically cluster into 10% of the time. We're entering that window. The next 1.5 years could define this entire cycle. Here's the strategic reality the establishment ignores. The United States produces 13% of global silver. China controls 70% of global refining. Mining means nothing without processing. No refined silver means no AI chips, no advanced military systems, no energy transition. That's why the United States has no choice but to secure physical supply. Price won't matter when availability dries up. Gold ETF holdings keep falling while price keeps climbing. Think about what that means. Only central banks are buying. Retail and institutions are selling the whole way up. That's not euphoria. That's early stage revaluation happening under the radar. United States deficit hit $697 billion in just 4 months, third largest in history. Net interest alone is now running at 1 trillion annualized, and over the next 12 months, 9.6 trillion in United States debt matures. Double what rolled ahead of the 2020 crisis. That's not a refinancing challenge, that's a mathematical trap. Silver premium in Shanghai holds at $9. Western paper is still stuck at 77. SHFE sits at 11 million ounces. China controls 70% of refining. Physical delivery is being enforced. Rehypothecation is finished. Bloomberg exposed. Russia done with dollar talks. Central banks accumulating. ETF holders exiting. Gold, $5,000 weekly close. First time ever. Invest with logic, not hype. This is John, and I'm out.